NVIDIA just released their Q2 earnings, and the short of it is that they did very well, beating EPS and revenue expectations, raising guidance, and announcing a massive $25 billion stock buyback. Basically, extremely good earnings. They also had an amazing Q1 earnings reported on the 24th of May, and shortly after this, NVIDIA's stock went absolutely mad, rising by like 32% in a single week, or something absolutely mind-blowing. And then it went on to reach all-time highs. This was in part, of course, due to just the strong demand right now and back in May as well for NVIDIA chips, but also in part due to FOMO, fear of missing out, where you had investors piling into the stock just in case they missed out on the next best thing, or in case they missed out on their one chance in life to make a lot of money very quickly. But it didn't stop there. People were piling into just about any stock that could possibly be related to AI in some way. They just didn't want to miss out. It was an AI frenzy, and just about any stock, like I said, that could be related to tech or AI in some even far-fetched way seemed to go absolutely crazy. And they went on a bit of a rally, even the ones that really shouldn't have. So now we find ourselves in somewhat of a similar position again. There has just been an event, the Q2 NVIDIA earnings this time, that is a potential catalyst for a big stock run up. I'm actually recording this video on Friday, the 25th of August. So yesterday was the first day that the stock market had opened since NVIDIA Q2 earnings. And actually, it was a pretty dismal red day in the stock market. It seemed like all of my US positions were actually going down, and that seemed to be the case across the board really. So far, things are doing the complete opposite and going in the complete opposite direction than what we saw post Q1 earnings for NVIDIA last time. But the ideas in this video still apply. And actually, you know what? It teaches us a really important lesson, and that is to never try to predict the stock market. No one actually knows what's going to happen, because I'm sure myself and a lot of other people, we probably expected to see a bit of a rally after the great NVIDIA earnings, but actually the stock market opened the next day and everything just went downhill. So we can never really predict what's going to happen, and that is probably one of the most important lessons. Of course, we are all actually predicting and trying to predict what's going to happen in the long term. We are putting our money into stocks and indices, markets that we believe will get better over time and will go up over time. We are predicting with quite strong certainty, like we are putting a lot of our money into them positions that they will go up over time. That is very different to trying to predict the short-term movements of the market. Now, of course, we're going to have to see what today's like for us and in the next few weeks and months following. But if we continue to see a little bit of a dip, then great. Long-term investors can continue to dollar cost average into their favorite positions at a bit of a discount than it has been in previous times. Or potentially things will start to rise like we saw last time. It could actually end up being even more extreme than last time, because the NVIDIA earnings this time round were even better than last. But like we said, no one can really predict what's going to happen. And if we do start to see a bit of a run up, it won't just be to NVIDIA stock. It will also be like we probably saw last time. And again, we don't actually know this, but I imagine it will be to other stocks like Palantir, Snowflake, FreeCAI, even the NASDAQ and indices. It will probably most likely be across the board any companies that you could possibly relate to tech or AI if we see an AI boom like we did back with the last earnings. The reason I wanted to make this video is pretty simple. I wanted to try and help settle people back down to a more mellow and level-headed base in their minds. And it's also really helpful for me to make these videos and talk through these ideas and these strategies and the emotions involved in investing in order to help settle my own mind as well. Because I believe a lot of people right now, or even in a few weeks' time, will be stressing and panicking about how they need to make massive moves in their portfolio to make sure that they don't miss out on their chance to make some money. But this sort of mindset starts creeping into the trading mindset and becoming a trader, which is fine if that's what you want to do. But if you want to be a long-term investor, then you need to just let that panic go and zoom out to the bigger picture. And that is hard to do. Or in the opposite way, when things start crashing down, instead of buying, you start wondering whether you should actually sell some of your portfolio, or whether you should just hold off on buying any more and just see what happens out there. Instead, stay convicted and stick to your plan. You should have a plan laid out in black and white, a strategy that you can turn to when there's a lot of market noise. When you're starting to feel panic or FOMO, you just go straight back to your strategy that you've made for yourself when you're in a good mindset. So when it's noisy, you're worrying, you turn to your plan, you don't worry about anything else, you remain emotionless, and you just follow your plan. Anyway, NVIDIA won't go up indefinitely. This never happens. At some point, undetermined point, we don't know, it will undergo a correction. Now, this isn't to say that NVIDIA is not a great company or that they will struggle in the future. I don't think this at all. There is such strong demand for them right now, and I believe this company will be around for a long, long time. Sure, maybe eventually some of their customers, the big companies that use and buy from NVIDIA, will actually start to turn in-house, i.e. they will start making their own chips, and that will take some of the extreme demand away from NVIDIA. But this won't happen overnight, of course. NVIDIA are so far ahead in this sector. And also, companies need the hardware right now. It's kind of like a cycle. The AI boom causes the AI software companies and other companies to require these chips. They go and buy them from NVIDIA. NVIDIA then supply them to these companies, and then these companies are undergoing such fast growth that they need more and more and more. They cycle back to NVIDIA. NVIDIA trying to keep up with demand. They are supplying more, so on and so forth. And until this circle breaks or cracks in some way and there's a bit of a slowdown in demand, companies don't really have such a chance to actually start looking to turn this in-house because they need the hardware right now in order to keep up with their own demand. I don't invest into NVIDIA directly as an individual holding, but I do have exposure to them through an S&P 500 ETF that I hold on my Vanguard account. But anyway, these ideas can be applied to the individual stocks that I do hold. For example, Tesla and Palantir. They will rise, they will go through a period of insane stock price growth, and then at some point there will be a correction and they will have somewhat of a pullback. Now, it's not to say that when they do undergo a correction that they will fall to all-time lows. We've seen it in the past where Tesla has fallen a lot after a run-up, but even so, there will be somewhat of a pullback. Stocks do not go up vertically indefinitely. I'm just trying to say that it's best practice to remain as level-headed and emotionless as you possibly can. And try not to get too excited about these events like the NVIDIA earnings, as I'm sure this event and others in the future will create a lot of noise. But what you've got to try and do is not let that excitement, even if you are feeling excited, maybe you're an NVIDIA holder yourself and you're absolutely buzzing about these great earnings, or you see potential for the stocks in your portfolio because of these earnings. That's the same case for a lot of people. But the important thing is not to let this excitement actually lead your investment decisions, because you don't want to be in a situation where you're starting to make your investment plans, your investment decisions based on the emotion that you're feeling at that time, rather than on the strategy and the plan that you've laid out for yourself. Because with events like this, there is always a lot of short-term movement and short-term volatility. The media, Wall Street analysts, and others can actually really drive FOMO, and they can help create a really positive sentiment in the market. But they can also really help build fear at different times. If prices are rising too quickly and you start to feel like you have FOMO, then what you need to do is zoom out. Literally, go on to a stock chart, and instead of looking at the 5-day period, zoom out to the 1-year period, to the 5-year period, and then look for times when this pattern has happened before, where the stock has increased and then it's had a bit of a pullback. You can see this really easily if you look at Tesla stock. Let's just do this together now actually. So I've gone on to Tesla stock. I've just literally Googled TSLA stock. Here we go. I've gone to the 5-year period, because if you're looking at a 5-day period or a 1-month period, you can see a very short amount of time in the market, and this doesn't help you stay emotionless at all. So you really do need to zoom out to the longer time periods. So let's look at 5 years. We can see at this time here, so from October to this point here, the stock went on a crazy run. I'll move my cursor so you can see, but here, it went absolutely crazy. And this was actually around the time that Tesla reported their Q3 earnings, and they reported record deliveries. So this caused a lot of people to obviously FOMO and get excited and go crazy and go hard into Tesla stock because they didn't want to miss out. And this caused the stock to go up by something like 60% in a month. But then look what happened. The stock naturally started coming back down. Now at this point here, the stock was around $258. So it could have happened that the stock never actually went to $258 again. It could have, dipped a little bit, then gone up again, dipped a little bit and moved up and moved up. So you don't know that it's going to come down to this price again or lower. I mean, Tesla did, look, it came all the way down here to $113. But the point is that by zooming out, you can try and stay more level-headed and you can try and stick to the plan that you've laid out for yourself. It's really the difference between thinking short-term and letting your emotions dictate your short-term movements and thinking long-term and letting your plan dictate your investing decisions. Think about where your conviction lies for the next 5 years, the next 10 years, and onwards from that. Which companies do you think, based on your own research, will do well in the future? That doesn't mean necessarily their stock price is going to do well in the next 5 days, but the company, the intrinsic value of the company will be better in 5 years, 10 years, 15 years, 20 years, whatever your time horizon is, than it is today. Which companies are they for you? And if you don't know or you don't really care to research, that's fine. In that case, don't put your money into individual stocks because at that point it's a little bit like gambling. Instead, just put your money into an S&P 500 ETF or something like that. Something way more diversified if you don't want to do that research. My strategy is always to dollar cost average in to the positions I have high conviction for. Having said that, I have a few different routes that I can take dependent on what my positions are doing at that time. So if we see a flip in the market and we actually see the likes of Palantir, Tesla, Alphabet, Amazon, those are the stocks that I hold in my portfolio. So those are the ones that I keep an eye on. If we see a flip and they start to, rise really quickly off the back of NVIDIA's great earnings, like we saw back in May, then I will continue to dollar cost average into those positions that I want to. I will stick to my plan. But what I won't do is put more and more money in because they're rising and I'm having FOMO in case I miss out on a lot of, a big opportunity to make money. And I won't be putting more money that I can afford in, that's for sure. I will be just dollar cost averaging in and waiting patiently for the correction to come. Of course, who knows when that will come, but at some point there will be a slight pullback. That doesn't mean that I'm going to not be investing at all and waiting for it to dip and then trying to time that dip. I'll continue to dollar cost average, but I will not, the point is I won't be having FOMO and put in more than I can afford in. In the case that stocks are dipping like they are now, or if we see a correction in the future, what I tend to do is I dollar cost average in, but I actually put a little bit extra money to take advantage of the opportunity that's presented. But again, I don't put in money that I can't afford. I don't start digging into my emergency fund in order to, buy a Tesla dip or anything like that. What I do is just when my money comes into me and my income every month, I allocate some of that to invest in, and then within that amount that I allocate to invest in, I just hold some back every single time. And then I make this pot that's available so that I can, execute that pot into my portfolio if I see an opportunity. I hope this video has helped you stay somewhat calm because I believe there will be a lot of market noise. There always is, especially with these high growth companies. So it's really important just to go back, stick to your plan, zoom out, think long term, and try to avoid all the market noise. Thank you so much for watching this video. I'll see you in another one very shortly.